Hey guys, welcome back to Branching Out, where real estate meets real life. I'm here today with my friend Stephen Knorr from Alcoa Mortgage.
Hello, everyone.
How's it going?
It's going awesome.
Thanks for being here today.
Absolutely.
It's crazy. So it's probably been almost 2 years since we first met.
We sure did.
We met at a networking event. It probably was one of my first networking events that I went to.
It was a real estate forecasting event.
It was. And we happened to sit at the same table. And at that point, I really had no idea what I was doing. And you were kind of just the first person that was willing to talk to me.
Look, God's always in control. He always has a plan. So that wasn't by accident, but I've been blessed to be a part of y'all's business ever since then.
Yes, you have been a really big part of our business, honestly. You were actually just telling me before we sat down that you got a referral yesterday.
That's the most amazing part about this business. It's all about relationships and building trust, and who can we help next? Because we are all here to serve.
For sure. So, all right, let's start off and let's talk about you. Let's talk about what exactly you do, how long you've been doing it. Let's start there.
So this is 23 years in mortgages. So that's all I've known since I got out of college. And shortly into that, I decided that I've seen people purchase homes. I've seen people, renovate and flip properties. That's before HGTV really made it like a fad and a thing. So I decided to take, a little risk. But at that point, it was just me. So it was me, the tools I owned and the tools I bought. And so my first flip was, a one-man show.
Okay.
And I decided that even at that point in my young 20s, I liked being in the office better than, sweating in the property. So, but it did show me the power of real estate. So through that, I'm very blessed where we're at right now through connections with great people and great partners. We still do flip properties. We do develop some spec builds and a lot of different things, but it all comes back to my love and passion for real estate because it can open up so many opportunities and doors and connections.
So what came first? Were you because you are a real estate investor as well, and I think you have a pretty creative portfolio, so we'll talk about that next. But what came first? Were you a real estate investor first, or did you start your mortgage company first?
So the mortgage business was first.
Okay.
So I was fresh out of college. My father had a big mortgage company that he scaled down. And so a lot of people think, oh, your dad, spoon fed you, but he basically said, hey, it's commission only. I'll teach you what I know, but, the hungry dog's going to eat. So having a background in college athletics, I kind of had that bet against me mentality. So I actually started out like most people do. I went to people who were better than me and said, hey, what are you doing and what can I take off your plate? So I don't really want to share this because I know it'll come back, but I will because it's funny. But at that point in time, what nobody wanted to do was single wides, and we had a product for that. So I was actually known as Stevie Single Wide, and I cut my teeth doing that, which there's no harder loan, chased deals, found a way, made it happen, and then, met a lot of good people who, turned into a really good business. But that's how that started. So the real estate investing came from just being inside of so many transactions, right? It's a transactional business, but we're relationship based. So I got to say like, hey, what do you do? You're buying this as an investment? Most people at that point in time were just thankful to get a house to live in. So it was a new concept to me. Nowadays, with social media and all the information, it's the younger generation has access to so much more knowledge than we did. So it was old school boots on the street, just, taking some of the coattails of people who've done it before me and say like, teach me about this. What is this? How does this work? We had the loan products for it, but back then they weren't very advantageous and there wasn't hard money and all the stuff that's out here right now. So it was just a different world. And like I said, I'm 23 years in the mortgage business and probably about 15 or so into the real estate investing, but it was all just, I lived it, but I wanted to live it, right? I wanted to, I would close people's transactions and then be like, can I do this? And nothing great happens without a little bit of risk and a lot of headaches. And sometimes it's more important to learn what not to do than what to do. And I'm a school of hard knocks type of guy. So unless I experience it, I'm not going to understand. And now I can tell other people, hey, don't do that. I've been down that path. That's no good.
Yeah, I learned the same way. So let's talk about your real estate investing. So what kind of things do you invest in? I think you have stuff at the beach. You have a lot of things going on. So let's talk about your investing strategy.
So one thing that has been very key for me, and again, to God be the glory, but I've been connected with a lot of partners. So I've always tried to be connected with people who are in the same industry, but a little bit different and also very much smarter than me. So that's real estate attorneys, GCs, real estate agents, other investors. So a lot of what I'm involved in, I'm a partner. So it also helps with the risk, but it can create more reward over time because we're putting our resources together. But I do own single family rentals, multifamily rentals, short-term rentals, and then we try to continually renovate, flip, and develop and do spec build. So
a little bit of everything.
Yeah, a little bit of everything. And I do have an 8 and a 6-year-old. So at this point in life, like family is first. I didn't always live that motto, but you can't get that time back. So sometimes, right now it's what makes sense for my family and these businesses, but cool thing with partners is you don't have to put it all on your plate. So that's been a huge key to my success.
Yeah, you got a lot going on. I didn't realize that. So your son's 8, right?
Yes.
And your son's the one that races.
That's right.
Oh my goodness, I didn't realize he was so young. I'm thinking like this teenager that because you're at races all the time.
He's a young 8. He's a June 8.
My
So
goodness.
we race Tuesday, we race Saturday. That is something that we're blessed. A lot of those same partners help us with the race thing as well. So my biggest blessing is my connections. And so the sphere that you run in is what allows a lot of opportunities. And a lot of people say, like, where do you get your deals from? Sometimes it's just knowing the right person, because you can't pay for a lead. You can't, you can go door knock and that works. But like the best deals that kind of fall into your lap are because somebody trusts you and they have a need and says, hey, this person, here's their situation. Can you help them? Oh yeah, I'd be so blessed to be able to help them. Let me reach out. So I don't have a secret sauce, right? It's just timing is a lot of it, but then also having the ability to get the deal closed, which we can absolutely do. So a lot of this space is time is money. How quick can you do this? Is this something you know how to do? So being able to have the expertise and the experience of seeing so much come at me all at once from different areas, we're not scared, but we also know when the right time to say no is. Yeah. Sometimes no is the best yes, but it's fun, right? Like mortgages is my bread and butter. I can do it with my eyes closed. Our team, our company, I mean, we've done business together. That's vanilla. So it's what I get up and do. But after 20 years of anything, it gets a little vanilla. So the investing side, you have no idea what the next one's going to look like. And it's all really different and lots of different sights, sounds, smells. When you go into these properties, it's everything. So it keeps you on your toes.
Yeah. And I love how you mentioned the connections is where you get your deals, because people ask me the same question. They're like, well, how do you get your deals? Are you going on the MLS? What are you doing? And I'm like, I'd say that I'm a lazy investor, because people will come to us, like I'm sure they come to you looking for help, looking for solutions. And that's what we're here to do. We're here to help them figure out the situation, if we can get them out of a bad situation, if they just need to sell to get cash. That's what we're here to do. So
yeah, I'll tell you a super cool thing that happened to us. And this is where my worlds collide, right? We get a call on the mortgage side. Hey, can you save this deal? The customer needs an FHA loan, but the other lender didn't realize their current mortgage is FHA. You can't have 2 FHA loans within a certain proximity. Do you have an answer? And I said, yeah, I do, but I'm going to have to switch hats real quick, because what I'll do, I'll use our investment company. We'll buy your house, free up that FHA loan. That way you can get a new FHA loan with us on the house you want to buy. We'll touch it up. We'll let your real estate agent sell it, and we all win. So that wasn't a profitable, when you look at the balance sheet, that deal didn't really make sense. But sometimes, serving and helping and taking that person that's this far into a transaction and being able to say, hey, I can help you on this, but it's not really what I want to do, but it's what I feel like I need to do. And guess what? That's going to, I'm a big believer in karma. So at some point that's going to come back and someone's going to say, hey, you helped out Mr. Jones right there. So is that something you can do for me? That's how business happens, when you're focused on the relationships first and taking care of people. But that's what's unique to me, right? Is my phone rings for mortgage questions and mortgage business And when you start dialoguing, you can actually find out that, oh, there's an opportunity for investing that the open market wouldn't know about because it's within that same transaction.
So true. And then this is why we tell our mentees about the importance of building a team with folks like you who are experienced, who have the connections, who can help them through you've seen probably so many different types of transactions. So
and the same thing, like, hey, is this something that you can do? Yeah, but right now I'm tied up. But let me put you with Christina or Greg because that's right in their wheelhouse.
Yeah, you're good at that.
Yeah, and so are y'all. And that's, sharing the pie. The people that I roll with they're more focused on the people than the profits, right? Yeah. And if you keep that mindset, then the pie is big enough where sometimes, even though you want to eat it, it's better just to serve it to somebody else and know it's going to come back tenfold.
We don't have a scarcity mindset.
Right.
So this is why we work so well together. Love that. All right. So let's talk about loans, because I feel like that is something much like insurance that's a little confusing to some people if they haven't been in the game. So most of our listeners are real estate investors.
Yep.
So let's talk about the kind of loan products that you have or that are out there that investors can take advantage of. We'll start with that question. I could ask you like multiple questions to that, but let's start there and then we can kind of describe them.
So I break it down with this question. Do you want to own this in an LLC or do you want to put this in a personal name? That's the left to right. That's conforming Fannie Freddie versus hard money, let's just call it non-conforming. So when you go the LLC route, there's bigger risk for the lending institution. So the rates might be a little bit higher. There may be some points, but there's not as much guidelines. So
what are points? Let's talk about that. That was actually one of the questions I was going to ask you.
All right. So, people get this confused all the time. 1 point is equal to 1% of the loan amount.
Okay.
But 1 point doesn't mean you go from 6 to 7. Or from 7 to 6. So a discount point is all interest rates are based on a par rate, right? A flat line. Here's your rate. If you want to get a rate lower, you have to pay points to buy it down below the market.
Got it.
Lender credits come from taking a slightly higher rate and us giving a rebate back. So we always try to give customers a rate that gives them a credit, a rate that costs no money, and then a rate that has points that's below where it should be. You're buying the market down.
Okay.
But it's based on lots of different variables, but 1 point equals 1% of your loan amount. How far that buys you down is unique to the transaction.
Okay. Yep. Makes sense. All right. So I would say probably most of our listeners know what conventional loans are, the Fannie Freddie loans. So let's go on the non-conforming side, the hard money.
Yep.
And let's talk about that. So say I am going to do a flip. What kind of loan do you typically help people with if they want to do that?
So we have a lot of different fix and flip lending products that's going to be based off, either an ARV or a loan to cost. So, you can get in with what I'll say is a minimal down payment, but you really need to have in that space 20% of your money you can put into it. You can finance the majority of the renovations, but again, as mentees and people learn, there's a hard cost for wood and walls and paint, but that doesn't mean you're going to get a return on that, right? So what you do to that property, are you adding a bedroom? Are you adding a bathroom? Are you adding square footage? Are you adding value? That's to be determined by your scope of work you're going to turn in. But the cool thing about those loans is they are in an LLC. So we underwrite the property, not the entity.
Got it.
And a lot of people will say, I don't even have an LLC. Perfect. That's even better because that means nobody can have a lien or a lawsuit against you. So it's okay to have a brand new LLC on those. Now, those loans are reviewed with a portfolio or an experience type of level. So if you are a new green investor and this is your first one, you're not going to get as favorable terms as somebody that's got 4 in the last 24 months or 4 in the last 12 months because that goes back into risk. So those are things that we look at on that side. But very simply, if you identify a property, a purchase price, a renovation budget, and then an ARV after renovation value, we can show you a couple loan options to acquire that.
Okay. So what if I buy a property in my personal name that I know is going to be an investment property? Can you flip it into an LLC later? Like, how does that work? I know there's a due on sale clause, but you see a lot of people doing that.
So we do. A lot of that comes to us, and there's a DSCR product, which it depends on if you're going to rent it and or flip it and sell it later.
So let's say it's a long-term rental.
Yeah. So you can then convert that to your LLC and take financing through that same type of space. You can even pull equity out if you need to, which a lot of times, the BRRRR method that people hear about, that's when you actually get not all of your money, but enough money to, maybe, use that as the down payment on the next product. So that's absolutely something that we see a lot of. And math comes into play. I'm very honest with people. Transparency is something that we are, focused on. Our number one core value in our office is we tell the truth. So I will
That's
never,
a good one.
I will never not be honest, but I will also tell them this is my opinion. But a lot of the times I'm telling people, hey, we got to do the math.
Yeah.
Does it math? Does it make sense?
For sure.
Just because someone told you or just because a website told you this is a number, that may not be the truth. So we also help people try to not get into a position where they have to make a tough decision because math wasn't done prior. So I know Greg's big on that, right?
100%.
What's your exit strategy? Because you better have a couple of them,
And
right?
I'd rather you tell me upfront, hey, you can't really afford to do this, instead of trying to squeeze me in to get the deal done. Like, I would rather you be honest with me and be like, hey, like, maybe if I had an extra $5,000, this would be a good deal, but not.
And even
right
more
now.
so, when we underwrite the file, it's with the investor in mind. We go back to relationships. We want to help this investor. We want to help this investor make money, and we want to help bring a property to market so that somebody can call it home. If we underwrite a bad deal and don't tell them or don't show them where the math is on the value of the property, someone's going to win, but it's not that investor, and then they're not going to want to do another one. So when we underwrite the property, hey, we're seeing the area at 300,000. Well, we're going to do our due diligence, and we may come back and say, we aren't seeing that number. Where are you getting your comps from? Because we want your exit strategy plan A to work.
Yeah.
So let's I know you have to close on Friday, but let's talk through this. Let's do some more research, because education is the key, and you can't get your money back once you've spent it, but you can sure lose it.
Yeah. So what are some other, I know you mentioned DSCR, but what are some other non-conforming loans that you guys frequently use?
So when I have that hat on and I'm talking to these customers, a lot of these people are self-employed.
Yeah, okay,
Or they do the dance of, we earn a lot of money, but our CPA does a good job and we don't claim a lot of it, right? So we can go off bank statements, we can go off 1099s, we can use 1065s and K1. So there's a lot of ways to not have to dive straight into the tax returns to underwrite the deal. The rent on the property is another big one. So there's portfolio products where we can look at more than just what does your W-2 say? What do your tax returns say? Because sometimes it makes sense to have a Schedule E where your real estate doesn't earn money on paper, but there is, there's cash flow. So there's a lot of options to use that type of cash flow.
Yeah. Okay. So then let's talk about underwriting. What would your ideal borrower look like, and what kind of things do borrowers need to have when they're filling out an application or to move forward with you?
So they do have to have employment to some degree. Now, again, when we're using the LLC products, we're more focused on the property than, the person's balance sheet or PFS or something like that. So the question is answered two different ways, whether you're trying to go conforming with Fannie and Freddie. Those guidelines are, the old joke, the golden rule. They have the gold, so they make the rules. All lenders fish from the same pond, so there's only so much creativity that we can introduce. But, you can have your taxes done. You can have your you need to know where your money's coming from.
Yeah.
So you need to know where your money's coming from, and that's okay if that's an HELOC or another investment or the sale of another property. But we do need to know where your down payment's coming from, and then we need to know what are you going to do with this property. Is your plan to flip it and exit immediately, or is it a hold, or what are you going to do? Because putting the plan together is what we do so that we can get it closed. But if the plan changes, that's okay. But then the answers from underwritings might change as well.
What about credit score? What's your typical, what's the
So-
lowest you'll go?
Credit score on the investing side is not as important for the rate like it
Okay.
is in conventional, but it's important for the terms. So we can go down to a 660, sometimes a 640, but that 680 plus, you're going to get what's going to look a lot better on paper as far as rate, terms, and then if there's a prepayment penalty, which some of these products do, the higher your credit score is, the less likelihood that we can maybe wash that.
Okay. Yeah. So what kind of down payments are you looking at? Like if an investor is coming to you, they want to buy a property, how much money should they typically have on hand for down payment, for closing costs, things like that? I mean, I know the down payment depends on the price of the
Yeah.
house, but what's kind of an average number that for an investor, you should have this kind of money?
For an
You're not paying all
investor, I
cash.
would say 20%, and then we can always talk about options to introduce less. But when you start bringing back in the math and telling the truth, it's like, hey, can you put down 20%? Because you're going to get more favorable terms. If you're a strong enough person with the experience, we do have options for lower down payments, but it's a teeter-totter. As you increase risk, meaning lower down payment, then you're going to also increase cost, points, and things like that in the payment, the carrying costs. So back to that investor, what's your goal? Do you have a certain cash flow? Do you have a certain ROI you're looking on this? So it's if I'm just making a blanket answer, it would be, have 20% available. And then if you don't want to spend it, you don't have to.
Yeah, that makes sense. So you mentioned HELOCs before. So have you seen recently, since, everyone has those 2-3% interest rates on their primary house right now, have you been seeing people taking HELOCs out on their primary to buy investment properties? Is that a thing that has been happening? And has it worked?
We've seen a spike in HELOCs altogether.
Yeah.
The Feds just cut rates yesterday
Yeah, let's
by
talk
a quarter
about that
percent. So, that has a direct impact on a HELOC. Everybody thinks it has a direct impact on mortgage rates. It has an indirect impact on mortgage rates. So, as the Feds continue to cut rates, which they will, you'll continue to see HELOC rates come down. So, people got in trouble when they took out HELOC rates and they were in the ones and they continued to grow. So, right now, since we're in a declining rate market, and people that have locked in those, generational rates, we are telling the truth and saying, yes, I can do this refinance, but you don't want to give up that rate.
Yeah.
Let's talk about options because you've got equity. Yeah. So people that have equity, we see that a lot. We also have a bridge loan product that can be used for certain things as well. So we're not going to tell you to do anything that we would never do personally. And that's something I put my feet on the ground and I will stand on. If I will never do it, I'm not going to tell you to do it. So anytime I see a rate like that, my first comfort, all right, well, we got to protect that.
Yes.
That's an investment that you'll never get a chance to get again. So let's talk about what options are here. And a customer may not have known that they needed to go that route, but when they hear that conversation, it's like, don't give that up. And a lot of people are, a lot of customers who, how are they getting into real estate? They're not selling that house and they're like, hey, can I keep this house? Can I turn this into a rental? Yeah, absolutely. Especially because it's got a 3% rate. So your return on that is going to be substantially higher than anybody that's buying at, a 6, 7, or even beyond, which has been the case.
So I said this term earlier, but the due on sale clause. So how often do you ever see that actually being called? In investment property situations where you may have bought the property in your name and you put it into your LLC where you're a sole member. Instances like that, not like crazy scammy instances, but investor.
In my role, I don't see that. I have heard of it happening, but the main purpose of underwriting is what is your intent
Yes.
right now, and do you have the ability to repay? So as long as you answer those questions correctly and you have purchased the property with the intent that you've stated to your lender.
Because you have to sign off on that intent.
That's correct.
Yeah.
And you make all your payments, meaning they've underwritten the file correctly, that you did have the ability to pay. I'm not going to say it never comes up, but at that point in time, I would tell people to, talk to your lender, talk to your CPA, talk to your counsel, because I don't want to say anything that's going to get people in trouble,
Right.
but those would be the ways to kind of explore that, but just do your research.
Yeah, because the house hacking, because a lot of people have been house hacking. People will buy a duplex, triplex, quadplex, live in one of the units, rent out the others, but then they're ready to rinse and repeat. And typically, is like the standard like a year they kind of have to stay in the property, or how does that work?
And again, I ask people to tell me the truth, but I also tell them my job's to get your loan closed. You have to sign those closing documents based on your intent. We have a couple customers right now who are younger who want to get into real estate, and they see the advantage of my first primary is going to be a duplex and I will live on this side. Eventually, when the time's right, I'll probably rent it out. Okay, well, you have that option at that time, but as long as your intent is to occupy as the primary right now, what you can't do is say, I'm going to live in it, and then, a week after closing, have both sides rented. That's where you're going to get yourself in trouble.
Yes, that's pretty scammy. Don't do that.
Don't do that.
Because that would also maybe get your realtor in trouble too.
It will get a lot of
people in trouble, and we don't want to get anyone in trouble. That's not what we do.
But it's the thing I tell people is it's your intent, and I can only prove your intent to a certain degree, but you know what you're doing. So be honest with the professionals. Let's go backwards. How do we start this? It's about relationships.
Yeah.
If you get somebody who's trying to help you in trouble, guess what? That relationship's over. Yeah. So nobody wants to work with somebody that lives way too far in the gray area, because it's going to catch up to them at some point.
For sure. So that brings me to my next point. So let's talk about relationships. And I know a lot of people are out there shopping lenders. So let's talk about the difference between shopping lenders and building a relationship with one lender, and like what the benefits are. Obviously shopping for rates, you're going to get the lowest rate, but you may not get a lender that is going to close on time.
Yeah.
So let's talk about that.
Thank you for bringing this up, because
Yes.
it's a delicate topic, but as a consumer, you have due diligence to do, right? Understand this. Your interest rate is not locked until you have a contract on a property. So many people will get the idea, hey, I want to do this. I'm going to shop 7 lenders. That's great. Until you get that contract, the market changes every single day.
Every day.
And the rates change every day. And if you call, we're a local lender. We have boots on the street. We invest in the community. We support people locally, and we're proud of that. I'm not knocking any websites, because there's a lot of good ones. I use some of them for investing as well, but they don't care like we care. They will also, if you call a lender and say, I want your lowest rate, you're also asking them for the highest cost. It's a teeter-totter.
Yeah, true.
So if you call somebody and say, I want your best rate today, but I'm not even going to do anything for a while, you're going to get yourself bait and switched, because they're going to give you the best rate. They may not even tell you about the highest cost, but if you're solely focused on the rate at that point, your math's going to be wrong.
Closing costs are $20,000.
Right. And we see that every single day.
Yeah.
So it is okay to shop lenders, but what you're searching for is trust.
Yes.
It's your biggest financial decision, whether you're a homeowner and it's your primary and or your investor. You work hard, you save your money, you make the right decisions. And you got that way by trusting somebody. If you trust a call center person from California and it works, great. But they're not going to literally drive to a property and help you look at it and touch it and feel it. That's what the power
Or
of
come to your closing.
Or come to your closing, right? And celebrate. So definitely shop, but there's more to it than just saving 1/8% on your interest rate.
Yeah.
And especially, don't make that decision. Get approved. Not pre-approved, I just talked to a guy yesterday. I said, well, what'd that guy from the website tell you? I haven't heard from anybody. I said, well, did you upload your documents? They didn't ask me for anything. They just sent me an approval letter. How valid is that?
Yeah.
We had an instance where our application asked for monthly income. So we called Mr. Smith and said, hey, Mr. Smith, do you really make $100,000 a month? No, I wish that's per year. Oh, okay. Well, you accidentally put that per month. So we'll update that for you. If that was a lender that didn't analyze and talk and have conversations and communication, he would have been approved for way more than he actually could get closed because data in is only as good as data out.
That's true. So what is a lock-in period? So like so sometimes lenders will be like, oh, do you want to lock in today? Do you want to lock in today? What does that mean? I don't
So
have clarity.
when you lock your loan, you're taking that market, the rate market that day, and for better or worse. Now there's a float down where if the market gets crazy good, you'd have to leave us, so we're going to float your rate down, but that doesn't happen a lot. But the lock period is the hedge of the lender saying, all right, we're going to get you this money and it's going to be there for your close date. So floating a rate is just like the ocean. You know, when you're under contract, you have the ability to lock at that day. Locks are based on risk. So the old layaway, if you put something on layaway for 60 days, it's going to cost you more than if you put it for 15 days because mortgage monies is repeat, right? So you're taking money off the shelf that nobody else can use when you lock it. So lock periods are 60 plus, then 60, 45, 30, and 15 days.
Okay.
So if you can, we had a lot of customers this week that we were like, hey, trust us, let's float your rate. We got a lot of good information coming. We got Fed week coming. We anticipate some movement to the positive. So even though you can lock, we monitor this. We have software, we have technology. We're going to float your rate and I'll tell you when to lock it.
Yeah.
And then at that point, we're going to capture that rate at that pricing and send them a disclosure. And then that's their rate.
Okay. All right. It makes more sense.
It can get and again, the consumer sometimes will say, help me understand this. And it's like, if you trust me, then trust me. This is what we do. We got screens. We're in front of it. We know, but you can get in trouble if you don't have a lender that knows what the market does. So one of the biggest key pieces in any type of investing, in any type of finance and real estate is having education yourself so that you know what's happening, but then building that relationship so that you can hang up the phone and say, all right, I trust them. I know what I got today is this, and they said they're going to try to get me better. We get what's called an alert to lock. So if I said, Christina, we're going to try to float you out this week and get you a better rate, I will get an alert that says, bad things have happened. Lock your pipeline, protect your customer. Yeah. So when that call happens, nice. I already know where that customer needs to be at. And if it's better, we lock it and go. If not, then we get them exactly what we disclosed day one. So it's a strategy, just like real estate investing. But it's a strategy that your loan officer, number one, has to know what they're doing, but they have to have the correct software and tools to really back up that strategy.
So another reason to have an educated lender on your team. What didn't we talk about that you want to bring up?
Anyone can buy a house. I mean, so many people, like I just talked to a lady last night, after hours, again, another local, a local person, they're going to cater around your schedule, right? So like a lot of people are like, what are you doing for lunch? I'm like, talking to my customers because that's the only time they can talk, right? Or what are you doing after work? I got a call scheduled because, they had to pick up their kids. But she had put it off. And I said, can I just ask you a question? What are you scared of right now? Let's just get this out of the way. And she was like, the unknown. And I said, all right, thank you for saying that. It is scary.
Yeah.
She works with a distribution company. And I said, it would be scary for me to show up and try to do your job. But, I'd rather just have you do it. So let's go through that. But just that initial conversation is so scary for people because they've been wanting to for so long, but they just don't know what to do. And somebody in their ears told them they're never going to be able to do it, or it's not going to work out, or, Uncle Joe got burned 30 years ago.
Had
so
a horrible tenant, never will do it.
Right. So, I just want everybody to know that you have resources here locally that can assist you literally from not knowing how to spell mortgage. That's one of my jokes. There's a T in mortgage. A lot of people don't know that. So, from understanding how to spell mortgage in real estate to becoming that seasoned investor, and it all can start in this room that we're sitting in right now.
Mm-hmm. You're right. That's what we do. Stephen, what book are you reading right now?
I'm actually reading a book by one of my partners. Is David Hoffman. He's a real estate agent in Charlotte. It's called Rules Over Relationships. And It's a pretty cool book. One of the things he has kind of coined, and I really like to use, especially with my team, be the expert, be the friend, and be present, right? And so I think right now, especially everything going on in the world right now, sometimes people aren't even looking for advice. They just need a friend, and a lot of times people, there might be a refinance boom happening right now. We don't know, but what people need is just a friend who's also an expert, but that's present, just to call in and say, hey, it's been a year. How are you? Have you thought about this? Have you heard about this? Do you have any questions? Let's just talk, right? So I think communication is what we're really good at, but it's also what everybody needs right now. Not a post, not a tweet, not an email, just a conversation or an in-person check-in. But that's kind of what that book talks about, and it's his story, but that is what I'm reading right now. But it kind of tied into the whole thing of, one of the keys we've talked about is relationships, connections, spheres, circles. And when you put yourself in the right ones, you're going to get the results you want.
Yeah. And I feel like we tell you guys this pretty much every podcast, that your network is your net worth. Like that, it's key. And everybody who we've had on the podcast so far has basically said the same thing. Awesome. So fun segment that we just started last week is we do a 5-minute fast fire questions.
Okay.
So I'm going to get my timer out.
All right.
And I'm going to ask you 5, maybe 6 questions, because I have a lot of questions to ask you. And you have to answer them in 60 seconds or less.
Ooh, all right.
So pressure is on.
I feel it.
I know. So let's see. Let's start this. Okay. All right. We'll give you an extra few seconds here.
Don't cut me short here.
First question. What is the biggest myth about real estate financing that you want to debunk?
That you do not have to have 20% down to buy a house.
That is a good one. All right. What's the minimum?
First-time home buyers can be 0, literally.
What?
Yep.
0?
0.
Oh my goodness.
And especially in the market we're in, where sellers aren't selling overnight, they're willing to pay closing costs. We have many customers that didn't think they could buy a house, and they're literally getting their earnest money back at closing. I promise you.
Oh my gosh.
That's a celebration. Awesome. So you do not have to have 20% down to buy a house.
All right. That's a good one. What is the number one piece of advice you'd give to a new investor?
Get educated. Understand what you want to do. Because everybody wants to be a real estate investor. That's too broad of a term.
Yep.
Do you want to develop? Do you want to wholesale? Do you want to hold? Do you want to flip? Do you want to be in short term? Find a niche and then go from there. But first and foremost, get educated.
It sounds like you've taken our class. I love it. What is your best piece of actionable advice for real estate investors right now? What can they go out there and do today?
I would say check in with your connections, right? Because the market's moving. There's a lot of different things happening. We're seeing distressed properties sit, depending on who you are and what you want to do. But go out and reconnect with people that helped you get to where you are and see what you guys can do together. I'm doing that myself. And it's refreshing. It's rewarding, man. Like, we were meant to do life together in person, breaking bread, sharing stories, having emotion, and helping each other.
I love it. All right. Crystal ball prediction for the 2026 real estate market. What do you think is going to happen? Fed already cut rates by 0.25%. What do you think is going to happen in 2026?
So, Fed Powell, when he gets at the podium, no one knows what he's going to say, and that's problematic. But there's no reason we shouldn't see rates continue to decline. My prediction is they will be under 6. How low, we don't know, but I have to remind people, this time last year, we were almost and at one point over 8%. So we've made huge strides, right? I also hope the data reporting gets better. Right now, the numbers that go into, the calculations for inflation and unemployment and certain things, it's just not valid. So they always release these numbers and then have to come back and reset them. And if the numbers were factual at the time of reporting, we would have a different market. So rate prediction under 6. Hope is that there's a better system that I think they're working on to actually report the data we need, the market needs.
Yeah, for sure. All right. What are the best real estate investing books that you have ever read that have shaped who you are today?
So, My uncle gave me Rich Dad, Poor Dad when I was in college, and it all started with that. And then I come from a long line of entrepreneurs, so that book comes to mind. I don't have any other that come out, but follow your path on where you want to go, but get that entrepreneurial mindset going because the sky is the limit. So, but that I'm very thankful. Robert, I couldn't even say that name when I was in college. I was like, what is this book all about? But I'm thankful to have family members and mentors who opened up my mind to having a different way to earn income.
That's how I got started too. Robert Kiyosaki, Rich Dad, Poor Dad. All right, bonus question, because we have a minute and 10 seconds left. What is the most asked question that you get as a lender?
What is your rate? What is my rate? And it's the same thing. You don't have a rate. You have an approval. You have a rate when you get a contract. So a loan application does not complete itself until you have a property address. So when people understand that, then we can talk about, but I approve you based off gross income. That's money you don't get to spend.
Okay, good. All right, last question.
All right, I'm ready.
What is the most asked question you get as a lender?
Oh, we talked about it earlier. What is my interest rate? What is your interest rate? So again, a mortgage application is not complete until you have a property address. So we want to address that question, but we want to also focus on, what can you afford? We approve people off of gross income. So that's the second most asked question. How much can you approve me for? My answer is always more than you can afford. And then I joke, I'm going to lend it, but you got to spend it. So let's talk about your budget. Let's identify your personal budget. The interest rate has a play in that, but you don't get to spend your gross paycheck. Some people do anyways, but that's what we approve off. So when you understand that, there's nothing wrong with the Honda, but if you test drive a Corvette before that, it's not the same. So helping people identify what they can afford is more important than their interest rate. And that question gets asked, so I'm able to say, thank you for asking. Let's dive into that because it's more to just that. But that's the question that everybody asks because they don't know. Just ask them about the rate. Ask them what the lowest rate is. That's what people are trained to say. So nailed it.
Nailed it. Perfect. All right, let's turn that off. Awesome. Well, this has been great, Stephen. Let's let our audience know where to find you.
Okay. Cell phone 704-453-1716, text and calls. And then my email, my name is spelled with a PH, so it's Stephen, Stephen @thenorgroup.com.
Awesome. Well, thank you so much for being here. This has been awesome. And thank you guys for listening to Branching Out. See you next time. Okay, good. All right, last question.
All right, I'm ready.
What is the most asked question you get as a lender?
Oh, we talked about it earlier. What is my interest rate? What is your interest rate? So again, a mortgage application is not complete until you have a property address. So we want to address that question, but we want to also focus on, what can you afford? We approve people off of gross income. So that's the second most asked question. How much can you approve me for? My answer is always more than you can afford. And then I joke, I'm going to lend it, but you got to spend it. So let's talk about your budget. Let's identify your personal budget. The interest rate has a play in that, but you don't get to spend your gross paycheck. Some people do anyways, but that's what we approve off. So when you understand that, there's nothing wrong with the Honda, but if you test drive a Corvette before that, it's not the same. So helping people identify what they can afford is more important than their interest rate. And that question gets asked, so I'm able to say, thank you for asking. Let's dive into that because it's more to just that. But that's the question that everybody asks because they don't know. Just ask them about the rate. Ask them what the lowest rate is. That's what people are trained to say. So nailed it.
Nailed it. Perfect. All right, let's turn that off. Awesome. Well, this has been great, Stephen. Let's let our audience know where to find you.
Okay. Cell phone 704-453-1716, text and calls. And then my email, my name is spelled with a PH, so it's Stephen, Stephen @thenorgroup.com.
Awesome. Well, thank you so much for being here. This has been awesome. And thank you guys for listening to Branching Out. See you next time.